Welcome to a new Wednesday afternoon special webinar. Today we are going to talk about how to avoid false breakouts. What a bad word. Including the following topics. What is a false breakout? What are the risks of such kind of false breakouts? And I have some tips for you to avoid this kind of false breakouts. I hope you can make sure that you stay until the end of this webinar, or if you watch it on YouTube later, till the end of this video, because when I'm showing you why breakout is a kind of a part of strategy trading, which means you have rules for entry, exit, and stop loss behavior. So some words for me, about me. My name is Markus Gabel. I'm a trader, speaker, coach, mentor, and I want to help you. I have a mission, you know, and a little bit life coach. And yeah, I'm 22 years right now. And if you want to have more information, my new homepage is published. Yes, it's done. tradingandpersonality.com. Click on it if you want and see what you can figure out there. Maybe if you want to book your own interview appointment with me, maybe we can have a talk about trading and life, maybe. In this webinar series, Trading Spotlight, I'm partnering with Admiral Markets, which is a Forex and CFD broker that offers trading on over 8,000 different financial instruments through one of the world's best trading platforms, MetaTrader 5. And finally, if you're watching this on YouTube, remember to like this video, share it with other traders, and subscribe so you will never miss an episode. Okay, that was the official introduction to our day, to our weekly Wednesday afternoon. It's Marcus time. Ladies and gentlemen, I'm really happy that you spend your lifetime with me today. And it's an interesting topic because it sounds a little bit confusing. False breakouts. Vincenzo, hello from my side, Robert as well. And I say thank you to my wonderful host from Admiral Markets, Katie. Hi, thank you for being here with me this afternoon. So, and ladies and gentlemen, the chat is open. It's on my right side of my screen. If you have any questions about this topic, or maybe the connection between trading and life, feel free to ask. You know, there is no secret in trading. The secret is you. So the Holy Grail exists, but the Holy Grail is only you as a human person. So let's start with the official topic this afternoon. What is a false breakout? First of all, official description, what is referred to as a false breakout. A false breakout is when the price temporarily moves above or below a key support or resistance level, but then later retreats back to the same side where it began. I guess for a trader, Jesus, this is the worst case scenario for the kind of breakout trader who enters into a trade as soon as the price breaks. So maybe let's see some examples in charts. And believe me, it's a kind of my story of my trading career. I lost so much money with this stupid kind of false breakouts. And so let's see, I can paint it for you. And first of all, you see, maybe this is a highest kind of resistance, and then you try to break out here on the upper side, here, this one, and then it fails. So it's a kind of my stupid story, because my mentor once, he told me, if you can see such a high, maybe, so let's see, maybe like this one, high, this one, this is a so-called point 2. So in my trading approach, so such highs has the number 2, and the correction point is the point number 3. So, and my teacher taught me a couple of years ago, if you see such a high point, this is a breakout point. So you have to set your entry there, and then you speculate on the breakouts. And believe me, I did it. I did it. And I lost so much money with this stupid thinking. And let me say, I blamed my my teacher. And once I talked to him, oh my God, that's so stupid. It's so stupid. I lost so much money if I followed your advices. Then he smiled to me and he said, maybe who is the stupid guy here? And I said, you. I said, you are. How should I? You said I should make breakouts, but it doesn't work most of the times. Then he looked at me and he smiled again and he said, who is the stupid one? Did you ever remember, what I told you, what I taught you about other points in trading? But look at this one. People fail in this kind of trading because they accept that always, because now we are in the middle of the chart, you know, we are right side of the chart. So maybe here we have on the right side of the chart, nobody knows what will happen next. So maybe you have here the last low point. So, and now people are gonna expect it that the price must break out to the lower side, but you can see, I don't know what will happen. So another example where it didn't work, so that was the high point, you see, then we had a little bit of break to the upper side, but then you see immediately the price dropped down again. So damn it, what happened here right now? So, and this was kind of trading approach. I never understand what happened there because I missed the deep insights. Maybe you know Isaac Newton. Who knows from you Isaac Newton? Isaac Newton, you know, figured out the gravity. And Isaac Newton figured out this point of causes and reaction. And if you want to become successful in trading, even in your own life, you need to understand the deeper causes in trading. And people, they never tried to figure out these deeper causes in life and in trading. They fell into this trap of a false breakout. And you can see we're on the right side of the chart, and very often, so maybe another example you can see in the same chart, there was a new high point, and you could see we had a little bit breakout, but the next point, the next black candle came and the price dropped down again. And after that, the next breakout came. So, and we have almost the same on the lower side. So as you can see, there are lots of false breakouts. So I can see, look, next one, that was on the right side of the chart, that was a high point. So now you can see the price broke out to the upper side and then it dropped down again. So, and at the moment you don't understand what happened exactly there, you will fall into this trap of a false breakout. So what we are talking about now, we need to understand the deeper causes of trading. So people used to see wonderful buildings, you know, they see the obvious things, what is up to me, what is in the air, you can see. But if you maybe, I remember if I'm in Frankfurt, for example, I have an office there, and there are huge towers, really big buildings. And you can see, oh, that's amazing. And people used to see these obvious things in life as well. So, but people never think about the foundation, what is below the grounds, the deeper causes. And this is one point we talk about today, about the deeper causes in trading, because at the moment you understand the real insights. Maybe you remember I told you this very often. My teacher wrote in his famous book, we come to trading about money, that's the obvious things, but we stay or we remain about the insights. So what are the insights? So it's hard to understand, because if you're a beginner maybe, and you are, how should I say, if you are a newbie in trading, then maybe you have a little bit win profit and you lose something, maybe you have a little bit profit and you lose a lot of things, a lot of money. So, and then you're sitting in front of your screen and you ask yourself, damn, What's the real deep? What are you talking about? What's the real insights? Let's talk about that. This is really important for you. And this is a kind you will hear very seldom in kind of videos on internet or something else. So here we go. Let's continue with the slides. So what is a breakout in general? Leave the obvious things. And my recommendation to you is lay down a little bit, take your water, take your cup of coffee, whatever, come down in your mind and think about, leave red and green candles right now. Stop watching charts right now. Listen to me, it's worth. I want to give you a high value you can use later in your charts. So what is a breakout in general? All of us, we are familiar with the concept of support and resist, you know? If someone is supporting you, you will feel good and comfortable. So if someone is resisting you, it feels bad and you feel upset. This morning in Germany, of course, I had a coaching with a wonderful, amazing guy. And we talked to him, I showed him this morning how to draw a trend in the proper way and some deeper insights. So it's a kind of coaching, you know. And after this session, it took around 75 minutes. He said, oh my God, my eyes are so clear right now. It was kind of mind opener. And this is kind of supporting, you know. And if someone supports you, you feel good and comfortable. And maybe you remember your first time if you're looking for a girlfriend or maybe for a boyfriend. And we guys, you know, we are very stupid in our behavior to catch a wonderful girlfriend. And I have special experience in that way because I got so many no's from girls. And it was a kind of resisting, you know, and it was a bad feeling. And after too many no's, I felt really upset. But this is kind of resisting, and this is a part of our life. Support and resistance are also well known in trading. So let's have a look behind the scenes. In trading, the meaning of support and resist is really similar to your normal life. Support, in special, as you can see in the slide, is a lower price level that an asset's price keeps bouncing against. It doesn't go below that level because more buyers are there and hold the price. The more time the asset spends above this level, the stronger the level of support is. Think about it. It's the obvious thing, what you can see in your chart. Resistance, on the upper side, is like a ceiling over an asset price that your trade cannot break through. As a trader, this means you don't feel good. You might even be a little scared or confused because you cannot explain what's happened there. Why it cannot break through. Obvious things, you know, see the power. So trading breakouts is a kind of a strategy trading which dictates you have rules for entry, exit, and a stop loss behavior. And what does it mean if I talk about the trading strategy? A breakout occurs when a price breaks through this support or resistance line. Breakout means that the support or resistance is not longer valid or strong enough to reject the prices. And this was the secret word, the prices. Think about the price. Breakout trading means that you speculate exactly on this kind of event, that it works fine and it works properly, that the price can break through. And as soon as you can see a closing price above or below such a kind of support or resist, then you can trade in direction of that breakout. And if it works, that's the point, if it works, then you can trail your stop. And this is my private advice and my private opinion. It's my pen, you know, you think about the pen always. Then you can trail your stop bar by bar. So again, think about the price. Forget all the other stuff, lines and channels. Yes, we're talking about resistance and support, but there are signs of real breakouts. Keep it in your mind, this point. Let's finish this circle of breakout trading strategy, but keep it in your minds when I'm telling you, think about the price. Forget trend line, something else. Think about the price. So, but let's finish the circle. There is an unmistakable sign to figure out if the support or resistance will hold strong or if the price will break through. It's really easy. As long as you don't have a closing price above or below support or resistance level, you can assume that this level will hold. Let's repeat it, it's important. As long as you don't have a closing price above or below a support or resistance level, you can assume that this level will hold strong. So if you can see a closing price above, below such a level, then this is a clear sign of a breakout. Again, if you can see a closing price above or below such a level, then this is a clear sign of a breakout. Price, obvious things. You see the tower, but you need to understand what's happened in the foundation, in the ground, the deeper cause, you know, Isaac Newton, cause and reaction. Think about that. So let's take a look at some examples, the same chart, so you can see, and let's give me another advice. That's normal candles. You know, we have thousands, almost thousands of patterns, and with wonderful and lovely names, 3 crows and 3 dead soldiers and whatever, and bullish and bearish engulfing and bullish and bearish, oh, I don't know, so many words. Steve Neeson wrote a book, a whole book about candlestick patterns. So if you want to make it easy, then use Heiken Ashi. Then you have 2 candles, trend continuation candle and balance candle. So, but let's have a look at the normal candles. So if you can see this one, so let me draw it for you. So for example, if you see this support here, so, and if you can make it a little bit, yeah, here on the left side. So you see, we came down again to this point with this white, and then the price rejected. And we saw higher prices. And then again, the price came again down to this point. And then you could see the next candle broke through and then the price dropped down. That was a real breakthrough. And you can see it again. Next point. Then we saw this low, a correction, and the price broke through again and dropped down further. And you can see it again here. We saw this low point. Then we saw close, and then the price dropped down. So, and now you can see sometimes on the upper side, there was a high point, and you see you had a breakthrough with the close, but the next candle dropped down again, and then up and low again. So how you can make it a little bit more easy? So in my opinion, trading must be as easy as possible. Why? Trading is really exhausting. because you are on the right side of the chart. No one knows what happens there in the next second. Just guessing, or in other words, an experienced trader would say it's a kind of mathematic, it's kind of probabilities. So now maybe you can use this, here we go. And maybe I use Heikin Ashi. Here we go. It's a free indicator in every kind of MetaTrader. So put it in the chart. So, and now you can see, oh, I have to use different colors. Okay, I use this one. So here, it's a really bit more easy. So let's figure out. Look at this one, start here. That was the high point here. You can see left side high point. So you see there was no close, no close. So yeah, you can see there was no close, no breakthrough, no breakout. Next point. So you see here last low, you can see no close, just only a little bit spike. Then later, there was the breakthrough and the price went down. So, and now you can see it's really, really easy. There was a high point and the first step you could see later, there was a breakthrough. You see, but it's a kind of probabilities. There is no guarantee in trading. For that, you need to calculate your risk. So, and on the lower side, you see, look at this one, low. And you see the first candle, no, there was a quick breakthrough, but without a close. It was not really a breakthrough or a breakout, whatever you say. It was not really a breakout because we had no close. And this is a clear signal. If you have a close, a real and clear close above or below such a high or lower point, support or resist, then it's a kind of real breakout. If you only have this spike, then they only catch the prices there in the market and you see the recovery from or they cover the price on the high point or the low point, and there was more demand or more supply, and the price changed the direction. And this is the visible proof that you have a close or not. And this is a clear sign for it. And that's the reason why I use for my trading Heikin Ashi system, because you only have 2 candles. So let me show you clear. Either you have a trend continuation candle. This is a big body and one shadow for long on the upper side, for short on the lower side, or you have a balanced candle. And a balanced candle means a small body in the middle of this period of this candle and shadows on the upper and the lower side. And this will help you very, very strong and clear to figure out if you are in the mood for a trend continuation or not. And this will help you to figure out if you have a real breakout or not. That's the point. Go through your, how should I say, all your charts, whatever. You always will see that point. It's really, really easy to work with Heikin Ashi. And then you don't have to interpret thousands and thousands of candlestick patterns and head and shoulders and whatever, sun and moon, whatever. Use Heikin Ashi, just only a recommendation from my side. No more, no less. Okay, let's go on with the slides. So that was kind of some examples of a real breakthrough. It's just really easy. If you see a support or resist, or you can only see this spikes on the upper and the lower side, think about what happens there. No close, no breakout. Yes, it is a breakout, a small breakout. It's just like a test if there will come more buyers into the market or not. If you say a close, then you have more buyers. And then the chance rising up for a real breakout. If you only have the spike by the end of the series, end of the period, then you have maybe, it's a trick. It's a kind of trick. It's a false breakout. It is a breakout, but without any kind of consequences for more buyers or sellers. So what are the risks of this kind of false breakout? To understand the risk in breakouts fully, we have to understand, and now here we go, what we really trade. Remember when I said, remember, and this word prices, and here we go. Quick reminder, you always trade the price. And prices can be too expensive, too cheap, or fair valued. That's all. And I guess I have around between 5 and 10 coachings every week. Every day between 1 and 2 coachings. And this is the absolute foundation. And almost no trader think about this kind of really deep cause and insights. We used to look the obvious things. We have to look at the DAX or Dow Jones, it's on the right side here, or Nasdaq, or gold, or silver, or Euro USD. I don't know what you are trading right now, but that's wrong. That's false breakouts. That's wrong. You can never trade the DAX. You can never trade the Dow. It's just a stupid name. No more, no less. You can trade Euro USD, but it's just a damn name. What you really trade is the price of that asset. Yes, there is written down DAX or Dow, but you have to pay if you want to have a piece of DAX, maybe, or Dow Jones, or Nasdaq, and then you have to pay this piece, and maybe we have Nasdaq at the moment, I don't know, 10,000? It's not points. Yes, we say, oh, DAX is at, oh, let's see, Dow Jones 26, what is it? Yes, 26,600. Yes, we say points, but that's wrong. You have to pay $26,600 for one contract. You have to pay that price. And if you trade Euro USD, you ask, how much is it right now? How much do I have to pay for €1? And then you know, oh, okay, I have to pay $1.11. You see, it's a price. It's a stupid normal price. And in our understanding, in our normal life, you go to the food store or you go to any kind of store and you went in and you see your stuff, what you want to buy, and you see, oh, it's so expensive this week. What's happened? Ah, yes, we are outside of the season. Or sometimes you come into the store and you say, oh, that's cheap. It's sale, special offer. And you see, oh, low price. But you know, deep in your subconsciousness, or maybe in your consciousness, you know, oh, I have to buy it right now. Because next week, the special sale is out. And we have higher prices again. And this, guys, is the deeper cause. This is Isaac Newton thinking about causes and reactions. And if you think in price, then you can think it through what if we are talking about when we say false breakouts. What happens on such a support or resist? And before I continue, let me give me this answer. Sorry, How do you put away the other candles when you put Heikinashi? Thanks. Alexander, that's really easy. That's really easy. So you have a special, what should I say? This is normal candle. And that's the only point you have to do. Take Heikinashi, put it in, drag and drop. Oh, that's the point. Then maybe you can switch the color, maybe to green. Here, you can do. And at the best, you do it in here in colors as well. From white to green, if you have a white background, of course. So then red you can leave. And then, okay, that's all. And here on the left, on the upper side, this candle, you have to switch to bar charts here on the left side. Then it works in that way. So that's all, Alexander. I hope I could help you with that, but that's all. In that way, if you do it in that way, the normal candles are left. That's all. But my suggestion, make a template for that. Save it as a template. Then you can put it in every kind of open charts you open. That's all. That's really easy. Okay, great. Thanks. Okay, where we stopped. Here we go. So think again, let's come back. Think please in prices. And if you think in prices, then you will know what a false breakout really mean. Think it. Go back. What does it mean if we talk about support or resist? If you have this kind of support, then you see a lot of buyers came in and they are willing to buy this cheap price. It's the same, you go to the food store and you want to buy your strawberries because you love strawberries. Me too, I love strawberries. With milk, of course. And now you can see, oh, last week I had to pay $2 and now I have to pay 99 cents. A lot of people are exactly the point. I call my friends. I call all my people, come into the store, the strawberries you can have are available for 99 cents. So all people come into the store and buy this. This is kind of support. You see, all people are willing to pay this small price, this cheap price. On the other side, you have the other point on the resist. It's an expensive price. And really less people are willing to pay this high price. So as a consequence, you have more supply, which means the price dropped down. You know, the task or the job of every kind of exchange is to keep in balance supply and demand and to give the best price. So if you have more supply than demand, and people are not longer willing to pay this expensive price, they want to go cheaper, then the exchange has the job to keep in balance these two prices, which means the price drops down, drops down, drops down. So this is how you should think as a really good trader. You think in prices. So British pound USD, how trade with small account 20 euro? There's no problem. You can do it at Admiral Markets, open a trade account with 20 euros and use micro lots. So my account, I have a special account to bring the proof that you can trade any kind of account. I have $200 on my account, and but you can do it with 20 euros. But if you want to grow it up, your accounts, Dennis, please, then work properly, and please work with micro lots. With 20 euros, it is possible to trade properly and seriously if you follow a plan. Now, of course, you can go all in, but then I promise you, I give you the guarantee, you can do it 1, 2, or 3 times, but the time will come, you will lose everything. So what's your plan? Open an account with 20 euros. It's no problem. But then follow plan. Learn trading with that. It's not a high account, but you can work a British pound USD. There's the asset. It's completely uninteresting. You have to pay a price. If you trade, for example, what you're asking for, British pound USD, and you have to pay the price for £1, because you ask me, how much is it right now? How much do I have to pay for my British pounds? Then I can ask you, I don't know the price right now, I have a look, I don't know. Then you know, okay, I have to pay 97 cents for £1. So if you come into your chart right now, okay, come on, let's check, let's make this example. So where is it? Here, British pound USD. So here we go. Okay, on the right side. So I have to pay. So now you're on the right side of the chart. Dennis, I want to ask you, I want to give you this answer. So now you have, if you want to trade, you're on the right side of the chart. You don't know what happened next. You cannot know. It's just a price. But first of all, you need to know what's about this price. It is cheap, it is expensive, or it is a normal price. How can you know that? You need to know about the fair price. That's the point. Never forget that. This is kind of education. But make a plan. If you want to speculate, if you want to have fun, then you can do whatever you want. If you want to grow up your account, then you have to learn trading. Never forget that. Thanks, Katie. So, as a consequence, so if you think about in prices, then you know what really happens at such a kind of false breakout. Because traders aren't willing to pay for over or underpriced levels. That's all. As a consequence, more buyers or sellers are drawn to a specific price and the direction of a breakout reverses. That's all. Stop thinking in this focusing on support and resist. Yes, we see that, but you need to know the deeper cause behind that. And it's about the price. People are willing to pay that price more than to sell. On the other side, they are not longer willing to pay that expensive price. The real risks in the false breakouts come from us. You know, this is the pen. So this pen comes from you. If a small doggy, a puppy dog comes in, he would bite on it, on the same thing. So who is right? The dog or it's a human is right? Both are right. For you, it's a pen. For the dog, it is a chew toy. It's a kind of perception. So if the pen would come from the pen, the dog would take this pen and would write a letter to his dog girlfriends. But no, it's a chew toy for the dog. That's the story about the pen. Everything comes from you. Everything comes from you. So the false breakout as well. Trading breakouts is a specific trading strategy. It's a kind of probabilities. You know, there's no guarantee. It's had its own rules and behaviors. And false breakout means a kind of mistake and a loss, and is therefore an inevitable part of this trading game. The question is, are you willing to accept this? Because losses are a needed part of trading. This is what you have to accept. And another risk might come from a wrongly configured stop loss, set too far away in the hope, oh, it must work. I hope. Hope is the field only the idiots are staying on that field. So breakout trading is more than kind of scalping mode with really close stops. If you love scalping, do it, but it's really, really exhausting. So stops being so far away means you hope, and hope just only such kind for idiots. My teacher told me, because breakout will be overly successful. Hope is completely misplaced in trading. How we can avoid such kind of false breakouts? It's pretty simple. Rather than act on a trade in real time, as soon as price breaks as a key level, we should wait until the candle closes to confirm the breakout strength. The idea of setting entry orders above or below support or resistance level automatically set up break is not a good idea. I don't do that. Wait if you can see a close. If you can see that close, then you can speculate on a continuation of this breakout. Entry orders allow us to get drawn into breakout trades that never actually materialize. But what if? You know, what if? We don't have all day to sit around and wait for breakouts. Oh, I hate it. Believe me, I hate it. How much costs your education? I gave you the, maybe have a look at tradingandpersonality.com, Dennis. This is my homepage, tradingandpersonality.com. So if physically waiting at your computer for a breakout is not an option, you can use a price alert that uses each candle's closing prices at its trigger. Or in other words, you will receive an alert if a support or resistance level is broken and remains broken through the close of that specific candle. You don't have to wait in front of the PC, even the sun is shining outside there. So that way you can receive your alert, log in your computer or mobile application. You can have this on your phone and then place the trade. That's all. That's all. You don't have to stay in front of your PC. Don't do that. There are so many other things that are more important than red and green candles. So and once selected, you can be alerted if a candle closes beyond the price level was selected, rather than alerted as soon as the price is broken in real time. So maybe you can do that in 1 minute, in 5 minutes, or for example, for an hourly chart, this means that we would only be alerted at the top of the hour, each bar closes. And yes, this is exactly what we are looking for and how we can avoid false breakouts. So that's the point. And yes, let's make a short conclusion. Again, a false breakout is actually worst case scenario for breakout traders who enters trades as soon as price breaks. And it's a kind of trading strategy, which means you need rules for that. Entry, exit, and probably a proper stop loss behavior. So, and my personal advice is if you can see a closing, that's the secret word, the closing price above or below such a level, this is a clear sign for a breakout. Otherwise, if you have a spike, it's a false breakout. So rather than act on a trade in real time, use such kind of alerted things on alert until I just don't have to wait in front of the PC. Don't do that. So, and with this deeper insights, and this is the main topic, think in prices, then you can avoid false breakouts. So you see it just almost 45 minutes right now, and it's just the obvious things. And I try to give you a little bit deeper insight, but I hope you can use it for your own trading. But let me tell you, once my teacher taught me, if you want to achieve a special place or such kind of goals, ask someone who is there already. Makes no sense to watching videos for people that on the same stage like you. Without my mentors, I would never at that spot where I am today. So this is my special advice. If you want to achieve a special place or stage or whatever goal, ask someone that you guide you from that guy, they are already there. And for that, Admin Markets created this kind of trading spotlight community. We get support after the webinar, when you most needed it. Paul, Jens, and myself, we shared all our trading ideas, and we support you in every kind of way we use to trade by ourselves. Tradersyard.com and join the trading spotlight group, tradersyard.com. There is only one requirement: open a real trade account, put some deposit on it, and follow us. We can't talk about everything, guys. So never forget, Friday, my wonderful and congenius partner Jens Klotz will talk about 3 powerful candlestick patterns in FX trading, including patterns, 3 line strike, 3 black crows, evening star. Oh, I talked about that right now. Shh, never told you. It's gonna be easier, you know, if you use Heikinashi. But he's a wonderful trader. He knows what he will do, what he's doing. Friday, 2 o'clock, afternoon, same time, same spot. Thank you guys for sharing your lifetime with me or spending your lifetime with me. I hope you had some deeper insights for your own trading. If you have any questions, come back to me to Trading Spotlight or tradingandpersonality.com. Let's talk about trading. Thanks to my host from Admiral Markets. And I'm almost punctually today without any technical issues. Have a wonderful afternoon. Be careful, stay healthy, and be careful about your thoughts. They are the beginning of your actions. See you. Bye-bye.